Hello guys, today we will talk a little bit about dividends, but right now let's take a look at my portfolio. The market opened 11 minutes ago. Since then I lost approximately 85 cents, but it's nothing because the market is opened for 10 minutes. But you can see that loves companies. It's a great company. Right now I'm in profit of 14.79%. I bought it for $50, which gives me 0.4 units. Overall, this is a great company for dividends. It has a dividend yield of 1.56%. You can take a look at this company on different sites like Seeking Alpha or Dividend.com. There are plenty of them. I can make another video about the websites that I use when I search for my companies. Okay, now let's get to the dividend. What is a dividend? You can think of it as a reward that you get from the company when you invest into the company, so that you trust them. It's a percentage of money from their profits, which explains a payout ratio. The payout ratio tells you what percentage of a company's profits are being paid out as a dividend. A lower payout ratio usually indicates a safe dividend that has more room to grow. My number one condition is that the payout ratio of a company has to be lower than 75%. Of course, there are some cases that have a higher payout ratio. For example, the Reality Income Corp, which has, I think, around 83% payout ratio, which I'm actually in a loss of 6.4%, but I don't really care as I invest in the long term. So yeah, and they pay monthly, which is good for me. Most of my companies pay quarterly, but monthly is also good. The next thing is dividend growth, which is the number of years that a company increased their dividend. For example, Coca-Cola company increased their dividend for 57 years, which is really good. When you are buying stocks, you know that a company is stable, and they have been stable throughout the recessions and stuff like right now, the corona. You know, that's the important thing. The next thing, you should look up for something that a company is special in. For example, I don't know, like their special product, or the Coca-Cola has their Coca-Cola. It's their special product. The next thing is a company growth. And what do I mean by that? If you take a look, for example, on a Yahoo Finance, on a company that you would like to buy, you can open their financial statement. The first thing that I look at in a financial statement of a company that I would like to buy is their revenue. If it increases over the years, okay, that's good. It's a good sign. The next thing is their assets compared to their liabilities. What I mean by that is that the company must have more assets than liabilities. That's obvious. The third thing is a debt. I look at the debt because for me it's important. Some people don't look at it, but for me it's important. I look at it, and if I see that a company is consistently paying their debts, it's also a good sign. The last thing I look at is their cash flow. If it also increases throughout the years, it's a good sign, and the company is stable. So that's the few things I look at in their financial statements. Well, I look at more, but I'm not here to help the experienced investors. I'm here to help the beginners. I also am a beginner, but I'm studying this topic for like a half a year. I was not investing until now. I studied the topic, I did my research, and right now you can see I'm doing it for, I think, 3 months, and most of my stocks are in profit, even though I am a dividend investor. But you guys, the main thing, you need to be emotionally stable. If you are not emotionally stable, you cannot invest. Because if you are not emotionally stable, you would sell, for example, I would sell the Walgreen Boots Alliance right now just because I am -$7 or -$4 in loss. I know it's not a big amount, but I have only invested $50. And I also can sell my other stocks, which are 16% in profit, just because they are in profit. I'm making money from them on dividends, and I'm also making money from the ones that are in loss. So that's very important, guys. The one last thing I need to talk about is the other type of a dividend is a stock dividend. A difference between stock dividend and a cash dividend is that when a company pays a stock dividend, it gives their investors a small amount of shares based on how much money they have invested into the company. Okay, that's all guys for this video. Thank you for watching. Consider subscribing, click the like button, and follow me on Instagram. Goodbye.